Hey, welcome to Behind the Scenes. It's a big day. We ready to roll? Ready to roll. Today, a special flash briefing for your Amazon Alexa smart speakers. Let's call it what happens eventually when big banks go bad. It was a sign of what was to come when Kenneth Hayne delivered his report with polar vortex level frostiness on Friday. And then ahead of the release on Monday, corporate watchdog ASIC went nuclear against CBA. It's completely banned the bank's financial advice business from charging any fees or taking any new clients for its failure to fix the fee for no service scandal. We now know the full extent of one very cranky commissioner's assessment over a year, more than 100 jaw-dropping witnesses, and more than 10,000 submissions. What you need to know about the 76 recommendations over almost 1,000 pages is: number 1, mortgage advice is to be turned on its head. What brokers dreaded has been confirmed. Commissions are on the chopping block in favour of a user-pays system. These have encouraged bigger loans, interest-only repayment choices, and higher interest options, but no more. Indeed, they're going to be forced, genius, to act in clients' best interests. Number 2, conflicted remuneration in financial advice seems crazy that still exists, but that is also to go. Safety should now take precedence over sales, and there'll be a new disciplinary body to make sure of it. Number 3, hawking of super and insurance is to be banned. No more cold calls or pressure sales tactics to those least equipped to deal with them. And number 4, a compensation scheme for consumers who have been ripped off. It hasn't recommended banks get out of the product business, so insurance and investment products, which they then can recommend. Fairly shockingly though, 24 entities and corporations, with Westpac being the only unnamed big bank, have been referred for civil or criminal charges. The government has vowed to take action on all 76 recommendations. The opposition has vowed to enact them all. Now, this is all sensible, if fairly shocking stuff, but there is thankfully no recommendation to tighten responsible lending rules. This is great, as that risks making the credit squeeze currently gripping the country tighter still. There's already a painful property price adjustment happening, and sensible people are finding it incredibly difficult to borrow. Ironically, a full mortgage commission ban, though, broker commission, the bit the government is not so keen on, could play right into the hands of our biggest lenders with the biggest high street presences. So it seems our largest lender, CBA, has more riding on this coming election than last week. Not much is going to happen before that, though. It's a hot political environment, however, and it will be easy for the opposition to paint the government as soft on misconduct and allied to big business. No doubt you've heard Labor say the government voted against this Royal Commission 26 times. Interesting days and months ahead.